Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital YouTube channel. Thank you so much for joining me today in this video where we talk about a lot of the similarities that we're seeing in this cycle versus the 2019 cycle, and also talking about the insights in terms of the retracement, in terms of the breakdown, in terms of the consolidation period and bottoming out prior to the halving. We're going to be talking about that all and a lot more. So subscribe to the channel. Like this video if you like videos like this, and let's dive right in. So let's first talk about the Bitcoin halving event. This blue line here that we see vertically propagated on the chart, this represents the halving event. This occurs every 4 years, and Bitcoin has a historical tendency of bottoming prior to this halving event around 547 days or 517 days. So in 2015, 547, and in 2019 517, and this cycle is similar to the 2019 cycle because we also saw Bitcoin bottom in November 2022 at 15,500 517 days prior to the Bitcoin halving event. That's pretty spectacular. Not only that, that's the similarity between 2019 and 2023. But not only that, we also saw a breakdown from the descending triangle that we see across time. We see a breakdown typically across cycles to just promote the downside acceleration in search of a new bear market bottom. We see this across all cycles. So is this cycle like 2019 in that respect? Well, we always see a breakdown from this descending triangle, downside acceleration, capitulation, and then bear market bottom. So this historical tendency is one that occurs across all cycles. So that's worth noting that 2023 is similar to 2019 in this respect, but we see that happening in the 2019 or at least 2015 cycle. So no real difference there. But a key difference is how much retracement do we see upon breakdown from this descending triangle across time. In 2015, it was 65% towards the downside. When we broke down from the 2019 cycle descending triangle, 50% towards the downside. When we broke down from this descending triangle in 2022, 55% downside. So 55% downside is more or less closer to the 50% downside that we saw in 2019. So again, 2019 is quite similar to 2023. So we have the retracement that we saw upon breakdown from the descending triangle. That's quite similar, 2023 to 2019, but we also have the similarity of how many days prior to the halving have we seen this bottom take place. 517 days. So two similarities, but here is where things get a little bit different. Because across time, we have to break the macro downtrend to enter a new macro uptrend. And we've seen this across cycles, that breaking the macro uptrend enables a new breaking the macro downtrend, enables a new macro uptrend. So in 2015, we broke the macro downtrend, and then we successfully retested this macro downtrend as a support before further upside into a new macro uptrend. In 2019, we never really retested this macro downtrend as a support. We just flew towards the upside and never really looked back until March 2020, where we saw a major retracement prior to the halving. In 2015, small retracement also prior to the halving into a consolidation range. This also a buy the hype, sell the news type of situation prior to the halving, but not really to the scale of this retracement prior to the halving in 2020. But nonetheless, we've also seen a breakout in 2023. Macro downtrend right over here has been broken. New macro uptrend is emerging right now, but it's very different to what we've seen in the past. It's very different to the 2019 uptrend where we saw dramatic upside in 3 months before local topping. And it's also very different to the 2015 cycle where we saw a breakout followed by a picture perfect retest attempt to confirm the breakout and then gradually incline over time. So right now we're kind of breaking out and moving sideways after that breakout. So in some way, it's very different, of course, to 2019. And this is where 2023 and 2019 differ. The breakout into a new macro uptrend was very different and is very different. In fact, this 2023 cycle is perhaps resembling somewhat of a 2015 cycle, whereby we're consolidating shortly after breaking out. Of course, this consolidation took place very close to the Bitcoin halving in 2016, and it's a little bit too soon to say that this is analogous right over here, because this consolidation range took place around a few months prior to the halving. So if we just extrapolate that here, definitely this consolidation is occurring much, much sooner than what we saw in 2015. So many similarities is the conclusion. Many similarities between 2023 and 2019, with the exception of how this macro uptrend is maturing. And because there are many similarities with 2023 and 2019, 2019 is probably going to be a better gauge for understanding price going forward. So in terms of the upcoming local top, this 2019 uptrend, of course, it happened much quicker and accelerated much quicker and topped out much quicker, but topped out at this red resistance. And that's what could happen also in this cycle as well. However, it's going to be more of a gradual uptrend, most likely. And at the same time, because this cycle is more similar to 2019, it's going to be dissimilar to 2015. And what we're seeing in 2015 right over here is that we saw a breakout beyond the macro downtrend and a retest of this downtrend before further upside. And what we're seeing right now is that, well, this retest hasn't happened. There was scope for this retest to occur a little bit earlier this year, but because this hasn't happened, it's getting increasingly unlikely that we're going to drop into this macro downtrend with each passing month, because this downtrend represents a lower and lower price point for Bitcoin, and as a result, it's going to get less and less likely for Bitcoin to tag this price point, which is going to just continue going down with each passing month. Having said that, there is scope for downside post local top. So once we rally a bit still and then register a local top, we could see a 2019 event once again take place, like we saw here, pre-halving retrace, which is a little bit sharper, a little bit more significant than what we saw in the 2015 period right over here. So is the 2023 cycle similar to the 2019? Just like in 2019, it's not just like 2019, but there are many, many similarities, going from the amount of days that Bitcoin bottomed prior to the halving in 2019. That's something that we're really, really similar on in this cycle. We're also very similar in terms of the retracement post breakdown from the descending triangle, 50% in 2019 and 55% in 2022. Very similar there. And a little bit dissimilar in terms of how quickly this uptrend is progressing. In 2019, it was much quicker. In 2023, it's taking much more time, slowly but gradually going towards the upside. But we could still see some similarities with 2019, where we could still local top at the red resistance and then see a pre-halving retrace just before the halving. So local topping somewhere in this region, perhaps 35, 40, 45, and then retracing prior to the halving, just like in 2019, and to a lesser degree, just like in 2015. So that's about it for today's video. Thank you so much for watching. If you enjoyed this one, leave a like, it would help me out a lot. And of course, subscribe to the channel for more videos like this in the future. Thank you so much for joining me in today's video. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.